Hello viewers, welcome to BR Ambedkar Open University. In this session, I am going to explain about the hire purchase system remaining methods. Previous class we learned how to prepare the analysis table when the hire purchase cost is given, when the down payment is given, when the cash price is given, when installments is given, when interest rate also given. In this hire purchase system, two methods already we completed in the previous class. Already previous video, it is the continuation of previous video only. So, in this method, I am going to discuss when installments are exclusive of interest. Previous what we did inclusive of interest, but in this video exclusive of interest. So, from this problem only I am going to explain. On January 1st, 2024, Sharada purchased a machine from Kusmu on hire purchase basis. The particulars given: cash price of the machine cost is 10,000 and 4,000 to be paid on signing of contract, and balance paid 3 installments, that is 2,000 per installment. Interest rate is 5% and depreciation charged at 10%. So, this is the brief information about this hire purchase system problem. So, in this problem what happened? Interest, this whatever 2,000 installment is there, interest is not included. So, that we have to calculate interest, then total installment also we have to calculate. Previous class what we did, that interest as well as principal amount also included in the installment only. So, here I will explain that cash price is how much? 10,000 rupees and down payment is how much? 4,000 rupees. 3 installments, that is 6,000. This 4 plus 6,000 is equal to what? Total down payment is 4,000, 6,000 is our installment, that is equal to the cash price. When it is equal to the cash price, it means what? It means the interest is not included in the installments. Then we have to calculate interest. Okay. So, down payment already we know, that is okay. Down payment 4,000, installment 6,000, total price is 10,000 rupees. So, in this problem interest is not included in the installment. That time how to prepare the analysis table, that is I am going to explain now. So, total, what is the opening balance? 10,000 rupees. At the time of how much we are paying? 4,000 rupees we paid. So, remaining balance is equal to how much? 6,000 rupees still balance which we have to pay. So, end of the year our balance is 6,000 rupees, but installment is 2,000 they given, but in this 2,000 what happened? Interest is excluded. So, we have to calculate the interest. So, first year interest, how to calculate that? After payment, total price is equal to 10,000. So, from 10,000 minus 4,000 down payment, that is equals to remaining due balance is equal to how much? 6,000 rupees only. So, on the 6,000 5% interest rate I calculated, that is 300 rupees. So, now total installment how much? Actual installment plus interest which we calculated just now. So, end of the first year 2,300 rupees we have to calculate, we have to pay to the hire vendor. So, after payment of this first installment, what is the balance? So, only actual installment only we have to deduct from the ending balance first year. 6,000 minus 2,000, remaining balance is 4,000 rupees. Second year interest also calculated. 4,000 rupees into 5%, what is that? 2,000 rupees is interest. So, total installment second year ni chepta So, after first year payment of 2300 rupees, that 2300 includes what? Total installment and interest also. So, just I segregated 2000 is the installment and 300 rupees is the interest. So, from 6000 you have to deduct this actual installment. The first year ending balance is 4000 rupees. Second year again we have to pay the interest. On which amount we have to pay? On 4000 only. So, 4000 how much? 5% interest. So, if after calculation of 5%, I got 200 rupees. So, 2000 rupees actual installment plus 200 rupees is the interest. So, total 2200 rupees, this one I have to pay to the hire vendor. So, after second installment payment, what is the balance? To find out the balance, only actual installment only how to take. Don't deduct this interest and installment. So, this installment includes what? Interest as well as actual installment. But to find out the due amount, only actual installment only you have to deduct. So, 4000 minus 2000, remaining balance is 2000 rupees. So, we already paid 2000 rupees actual interest, but 5% actual installment is 2000, interest how much? 5%, 100 rupees. So, end of the third year we have to pay actual installment plus interest, total 2100 we have to pay. So, end of the year the balance become nil. Then our payment, our due amount is nil after 3 years. Like that we have to prepare the analysis table. Now, Kusma's account we have to prepare. Kusma's account, who is the Kusma? Is hire vendor, seller account. Okay. So, seller vendor always in seller vendor we are selling machine. Okay. What is the machine cost? We receive, our balance is what? Machine cost is 1000 or 10,000 rupees, sorry, 10,000 rupees. So, 10,000 is the machine cost, interest is equal to how much? First year 300, which I calculated here only, that only. So, previous class also I explained about it. So, total cost is equal to how much? 10,300, but at the time of down payment, this is down payment 4,000, first installment 2,300. So, that is 2,300. What is the balance carried down? Balance is what? 4,000. This is brought down to the next year. So, after that what happened? Again I paid interest. Okay. Again I paid interest to the hire vendor, and from my total balance hire vendor what happened? He is deducting is the installment. Total balance is how much? That is 2000 rupees. Okay. So, 2000 rupees I transferred to next year. So, 2000 plus final year interest, third year interest 100 rupees, total 2100 rupees. So, already 2000 actual installment is there, interest 100 rupees is there. This we have to pay to the as a installment. Is it clear? Like this we have to prepare the Kusma's account. Okay. So, here Kusma's accounts, what are the items we will take? In any hire vendor account, interest we are going to credit to the hire vendor account, sorry, debit and credit. Okay, credit, and whatever the amount is received, that amount we are going to debit. So, Kusma's account data to installment account, and when he receive the interest, interest account data to Kusma's accounts. Like that we have to prepare. So, this is the one method. And fourth method is what? Calculation of interest when rate is not given. So, calculation of interest when rate is not given, this is very important. This is very important. Okay. So, in the previous problem, each and every problem they given rate or interest rate, but in this problem what happened? Rate not given, we have to calculate. So, how to calculate that? Simple. To calculation of that interest, there is a method. How to calculate that? Whatever cash price is there, actual cost of the product, okay, that amount you can deduct total payment. Is it clear? So, for example, I will explain from this using of this problem. On 1st January 2004, XYZ and company took a delivery from ABC Company Limited, emission hire purchase system, that is 1500 was paid on delivery. So, that is nothing but a down payment, and the balance was payable 5 annual installments, 3000 each payable. So, every December 31st we are paying that installment. So, this cash price is machine was is 15,000 only. So, what happened? Machine cost is equal to how much? 15,000. This is cash price. Okay. So, down payment how much we paid? 1500 we paid, and 5 equal installments, that is 15,000 rupees. So, total for this product how much amount we paid? 16,500 rupees we paid. So, 16,500 original cost, that is which paid by the buyer. Actual cost is equal to how much? Only 15,000 already they given. So, excess amount how much we paid? 1500 rupees excess we are paying. So, this is nothing but a interest. Is it clear? So, the difference between original cost and total price of the amount of the product, that is called as a interest. So, this 1500 every year again we have to do segregation. How to do that? Here first year generally amount outstanding how much? First year after payment of down payment. So, total down payment is equal to 1500 rupees, but due is equal to how much? 15,000 rupees. So, first year also I paid 3000 rupees, remaining due is equal to how much? 12,000 rupees. So, year wise balance due amount first of all we need to find out. Is it clear? So, after payment of down payment, year wise due we have to calculate. So, after calculation of year wise due, that is 15,000, 12,000, 9,000, 6,000, 38,000. So, to first year balance is equal to 15,000, second year balance is equal to 12,000, third year balance is equal to 9,000, and fourth year balance is equal to 6,000, last year balance is equal to 3,000. So, this is the balance. On this balance only we have to calculate the interest. So, how to calculate the interest? See, first total how much we paid interest? As early discussion, 1500 is equal to 1500 rupees are our interest. So, how many years? 5 years. This 1500 rupees 5 equal proportionate as per that due amount we have to allocate. So, here how I am going to allocate? This proportionate only 15,000, 12,000, 9,000, 6,000, 3,000. So, 3 zeros cancel, 3 ones are, 3 twos are, 3 threes are, 3 fours are, 3 fives are. So, it means what? 5:4:3:2:1. So, which is need to divided ratio as per that due balance only. So, total interest 500, which is need to divided as per the due balance ratios for the all years we have to calculate. So, every year I calculated that first year balance interest is equal to 500 rupees, second year balance is equal to 400 rupees, third year balance is equal to 300 rupees, second year balance interest 200. So, final year 100 rupees. So, which is this is the interest amount. Is it clear? So, previous what happened? Rate only they given. So, according to rate we calculated. Now, rate not given. To calculate that the interest, what we did? First, total payments we taken, total payments of purchase amount, deduct cash price of the product. So, after that you will get the interest. So, that interest only as per due balance equally proportionately all years I calculated. So, this interest is we got. Okay. So, after that remaining is same procedure. So, what is the same procedure? Remaining is same procedure, analysis table we have to do that. So, how we are going to do that analysis table? So, already I given that first two problems already I given, same only here also we are going to do analysis table. So, for analysis table how many we required? 6 columns we required. Is it clear? 6 columns. Just I am keeping here. What is the date? That is January 1st 2014 onwards. So, opening date is what? 1st January 1st 2014, 1st 2014. Balance mission cost is equal to how much? 15,000 rupees. Okay. So, 15,000 rupees. Okay. So, in this 15 total how much we paid? Just second. So, total actually we paid 16,500 rupees we paid, but actual cost is equal to how much? Only 15,000 of the product. So, that only you can take 15,000. Okay. So, this is the 15,000. So, after that what happened? Down payment already we excluded, this is the end of the year, sorry. Okay. So, already interest already was they given after payment of down payment, here day 1 also I am taking. (31st 12/2014) 1st 2014. So, opening balance cost is equal to, and they not given. So, in this method first we have to write down payment 1500 rupees. So, actual installment not there, interest also not there, balance is equal to 15,000 rupees. So, next one is what? So, 15,000 end of the balance. How much interest we paid? We paid 500 rupees. So, 500 rupees which is calculated previously. What is the installment? Installment they said 3,000 each installment. So, 3,000. So, total actual installment what? 3,200. So, balance is equal to what? 12,000. Same 31st 12/14. So, balance what? 12,000 rupees. How much interest we paid? 4,400 rupees, sorry, and installment is equal to what? 3,000. Okay. So, 3,000 total 3,400 we paid. So, this is the table which they, after calculation of this interest, same analysis table also we have to prepare. So, for the preparation of analysis table, this is the format. So, according to this format only we have to prepare the interest and installment, actual installment. So, first day 1 cost is equal to 2014. What is the opening balance? Total amount, opening balance of the machine cost is equal to 15,000. So, 15,000 down payment how much we paid? 1500 rupees we paid. So, installment is not there, interest is not there at the time first day there is no interest. So, balance how much we have to pay? 13,500. So, this 13,500 we have to pay interest for this end of the year. So, that is 31/1/2014. So, what is that? 13,500. So, interest already we calculated, that is how much? First year interest 500 rupees. Okay. Already our installment is equal to how much? 3,000 rupees. So, actual installment how much? This interest already included in the installments. So, remaining 2,500 rupees. So, after 2500 deduction of actual installment from the opening balance, then it is 11,000 rupees, right. So, next year 31st 12 2015. So, 11,000 rupees is the balance. So, how much we paid? 400 interest we paid, total installment 3,000 every year, we know that same. How many years? Until 5th year. Okay. So, until 5th year we have to pay 3,000 installment. So, this is same. So, already this actual installment how much? 2600. So, after deduction of 11,000 minus 2600, what is the due balance? So, that is almost 8,400 rupees. 8,400 rupees. Is it clear? So, 8,400 rupees is the balance. Next year again 2016. So, after calculation of interest, with the help of these figures we have to prepare the analysis table. So, how to write the analysis table? Already I draw that format also. So, previously also we are used this same format. So, date 1, what is that? 1st 1 2014. What is our opening balance? Opening balance always you have to take the cost of the machine only. So, that is 15,000 rupees. So, after 15,000, when the cash price is 15,000, down payment how much we paid? 1,500 rupees we paid. So, actual installment is not there, interest also not there, balance how much? After payment of down payment, that is 13,500 rupees is the balance. So, end of the year on this 13,500 we have to pay the interest. So, same year first year end of the year, that is balance how much? 13,500. So, 13,500, what is our interest? We paid 500, total installment 3,000 rupees. What is the actual installment? The after deduction of this 500 from this 3,000, that is 2,500 is the our actual installment. So, what is the remaining balance? 11,000 rupees. So, next year 31st 12 15. So, what is the amount? 11,000 is the balance. So, on 11,000 what is that interest rate? Interest rate not given, that is the reason we calculated interest value. So, already interest value we know that 400 rupees, okay. Total installment 3,000 rupees. So, 3,000 minus 400, 2,600 actual installment. So, from 11,000 we have to deduct, that is actual installment how much? 2,600. From due you can deduct that 2,600 after deduction of 8,400 rupees is the balance. So, 8,400 for next year how much? 31, 12, 16, 8,400. How much interest we paid? 300. So, every year we paid this like this only, okay. Installment also same, okay. So, 3,000, even 5th year also 3,000. Now, what we have to calculate? 31, 12, 17, that is third installment, 31, 12, 18. 1, 2, 3, 4, 5, yeah, 14, 15, 16, 17, 18, 5 installments are covered. So, after 300 pay, after calculation of 300, what is the amount? Actual installment 3000, 3000 minus 300, original installment you will get, that is 2700. So, 2700 you can deduct from the 8400. So, 5700 is the our balance. Next, 5700 minus 2800. So, what is that remaining balance? 2900 is the balance. So, that end of the 5th year balance 2900, but we paid 100 rupees. So, balance, if you observe this one, these both are tallied here. How it is tallied? Our actual installment is 2900, our calculation, our interest also 100 rupees. So, end of the balance nil. So, like that we have to prepare the analysis table. So, in this case what happened? They not given interest rate. If they not given interest rate, what we have to do? First, balance of interest we have to calculate. How to calculate the balance of interest rate? Already I showed that. Total down payment, total installment. You will get the total price. Okay. You will get the total price. Is it clear? So, after total price, you can deduct the original cost 15,000 rupees. You will get the difference amount, that is 1500 rupees only. So, this 1500 total interest, the total interest also for all the years. For each year interest, how to calculate that? Based on due amount only. So, first due amount we have to calculate. So, first year how much is the due? 15,000 is the due. After first year how much we paid? 3,000 we paid. So, after 3,000 payments, what is the due? 12,000, that is the second year. After second installment 9,000, after third installment 6,000, fourth installment 3,000, fifth installment 0 balance. So, means here I calculated due balance only. So, from the due balance, proportionate wise, this whatever the 1500 interest is there, that amount I distributed year wise. Is it clear? So, year wise I distributed, first year 500 got, second year 400 got, third year 600, fourth year 200, fifth year 100. So, if you observe this table, the balance of fifth year. So, this is after first year, second year, third year, fourth year, fifth year, balance become 0. So, like this we have to prepare. Next, preparation of that hire vendor account is common, that is same. So, how to prepare that hire vendor account? I will show that. This is the T form account, general ledger account only. First, you have to write debit, credit, okay. Date which we required, date, particulars, date, particulars. You can write the details also. Date, particulars, total amount, date, particulars, total amount. Okay. Year wise you have to draw it. Yeah, year wise you have to prepare the account. So, who is the account? This one is, who is the hire vendor? January 1st, XY company took a delivery from ABC and company limited mission hire purchase system. So, ABC from ABC company. So, how to start this ABC company account? Okay. What is the general entry for starting transaction? They are sellers, their asset is going. Is it clear? Already previous there are so many problems already I did. So, mission cost, okay, mission is going out, is it clear? So, mission we are selling, we are receiving cash. Okay. Who is the seller? ABC and company. What they are selling? Machinery account. Machinery account data to ABC account. So, here buy machinery account. How much? 15,000 is the original cost. Okay. What they received? Down payment how much they paid? 1114. Okay. Down payment they received to cash. To cash how much they received? 1500 down payment. Okay. And purchaser he paid interest by interest. How much? First year 500. Close the year ending account. So, that is close the year ending account. After end of the day, end of the first year, first 12/14, he paid first installment. What is the amount he paid? 3000 rupees he paid. Okay. So, total how much? 15,500 and both credit side is more. So, that I am writing both side 15,500. Okay. What is the remaining balance? After deduction of down payment, and first installment, balance amount is equal to 4,500 minus 15,500, that is 11,000 rupees. This is the balance carried out. Next, balance brought down next year, when first 15 by balance brought down how much? 11,000 rupees. Same second year installment how much? Second year installment interest, sorry, interest 400 rupees, and end of the day 31st 12/15 to installment or cash, second installment, how much they paid? 3000 they paid. Okay. Total amount how much? Which side is more? 11,400, credit side is more. So, you can write 11,400, 11,400. So, balance is what after payment of that remaining, after payment of that 3000, 8,400 balance 8,400. So, if you observe here, the balance amount will come this one only. This is the first year down payment balance, this is the first year ending the balance, second year ending. So, like that only it will come. Okay. Next one, what happened? After that, by balance brought down, which year? From second year to third year. So, total due still how much? 8,400. Again we are going to pay interest to the hire vendor, that is how much? 300 rupees. So, here interest also they paid installment to installment. Which installment? This one, third installment cash. Okay. So, how much we paid? Equally we paid 3000 rupees. So, what is the remaining balance? 8700 total, 8700. So, after deduction of that 3000, 5700 to balance 5700. So, continuation remaining 2 years also. So, similarly 1 1, yes, okay, enough, yes. So, next year balance brought down by balance how much? 5700. So, this is the year, again 30 end of the year we are paying installment, that is 17 to interest, that is fourth installment 3000. So, already year how much interest we have to pay? Fourth year 200, total balance is equal to how much? 5900, 5900, still balance how much? To balance 2900. So, 2900 is carried down. Next last year, first 118 by balance how much? 2900. Our installment is equal to how much? End of the day, this is the end of the day. Balance always you remember opening day only have to bring it, then interest you are going to receive end of the year. So, I am just reminding you all, remember this point. By interest, that is 100 rupees. So, end of the day how much? 3000 rupees. Here final installment how much? To installment, fifth one, that is 3000. So, 3000, 3000. So, like this we have to prepare the hire vendor account. End of the day installment with interest everything is going to be equal. So, in this method what you learn? When interest rate is not given, how to prepare, how to calculate interest, then how to prepare the hire vendor account. So, like this we have to do it. Like this we have to prepare hire vendor accounts. So, in this video what you learn? If the hire purchase system interest is not given, first how to calculate interest, that already I showed that. So, that is first we have to calculate balance, that is total price of the product and original cost of the product. In this total price of the product, how you are going to calculate? Down payment plus installments. So, that is 16,500. I deducted original cost. After deduction of original cost, I got it, that is 1500. So, that 1500 is nothing but a interest. In this problem what happened? Interest not given. So, when the interest is not given, I need to calculate year wise interest. For that what I did? Year wise balance due amount I taken, and that due based on that proportionate, that interest is I allocated to year wise. After allocation of that year wise, simple as usual I prepared that analysis table. So, after preparation of this analysis table, general accounts ledger account of hire vendor I prepared. So, like this you have to prepare. In this hire purchase system, this is the very most important steps. So, this is the calculation of interest and interest related problems. Thank you.